Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the low time frame expanding flat scenario, where we're looking for a three-wave structure in an ABC, which is part of a higher degree wave 4, and after wave 4 is then in at the low, we're looking for a wave 5 to the upside. Now in this scenario, we're then now looking for a wave B to the upside, which has to be a three-wave structure and then a zigzag 1, 2, 3, 4, 5, end of wave A, then looking for a three-wave B before another impulse to the upside in a wave C to finish this blue wave B. Most common target for B between the 1.236 and the 1.38, which is between 38.7k and 39.2k, after which we then expect an impulse to the downside towards this wave C common target area, which is between 33.7 and 32.1k. The only issue at the moment is that this wave A over here is going to be very, very high. At the moment, we can count over here a 1, 2, then we're looking for a 3, 4, and a wave 5, because this looks very much like a straight line to the upside. And we didn't really see any range that comes close to this range of wave 2. Usually a wave 4 is also longer, so preferably this here is your wave 4 for then a wave 5. But you can see that this wave 5 is going to get very close to the target area of B without showing a three-wave structure yet, because this is only a wave A, and the fact that this is then only wave A lowers the probabilities for this scenario because this wave A is going to be so incredibly long. The invalidation for this scenario is if price moves to the downside, hits the low of A over here without having a three-wave structure to the upside. Now if you then zoom in to this five-wave move to the upside over here in a little bit more detail, then this is what you have to be looking for if we're looking for an impulse. 1, 2, 3, looking for 4, and then a wave 5. Now something that is important is we do have a 1 hour gap over here, and this gap, the low just now earlier this morning, has been tested once by this candle over here, and if price starts to close candles inside this gap, probabilities increase to fill the gap and move to the downside, which basically means moving to the 0.5 Fibonacci, which is taken from the low of 2 to the high of 3. Now for a wave 4, the most common target area is the 302 to the 05, so that is at least beneficial, but you can see the 0.618 is very close to filling that gap over here, which is sitting at 36.3k, which invalidates a wave 4 and increases the probabilities for scenarios coming up. Now after a wave 4, we then want to see a wave 5 to the upside that at least takes the double top that we have over here. Also pay attention to this double top, by the way, because you could get a swing failure pattern, meaning you wick the high, close below, and then price moves towards the downside. If we look at the more bearish scenario, then we're looking at a three-wave structure to the upside. So here we're then looking for an ABC to the upside, where the fast leg up is then a 1, 2, 1, 2, 3, 4, 5, 4, 5, with then a diagonal structure here at the end to finish this wave C inside the common target area for a wave C as well. And then we're now looking for a move again to the downside, because this three-wave structure here increases then probabilities for other scenarios I show in a second. Now preferably after this wave C, we do see weakness on the chart, where I prefer to see bearish CVD divergences. So I have no problem for price ranging here, but the moment you start to see bearish CVD divergences over here forming, it can increase the probabilities for price to actually have a bigger move towards the downside, and might leave the double top that price generated over here. It might leave that double top for a while, first come down and then later come back up again to take the double top, because this double top should not be forgotten. It's like a magnet for price, but it doesn't mean price has to go up instantly to take the liquidity now. Now if we look at a three-wave structure to the upside here, there is two scenarios that immediately have to come to mind. The first one is a flat structure, but then it is a regular flat. So now we're looking at a three-wave A. We have a zigzag in a wave B that is finished inside the common target area for a wave B in a regular flat, which is between the 09 and the 105. And then we're looking for an impulse to the downside in wave C, where this is a 1, 2, 1, 2 continuation down on the lower time frame, or we are currently working on a wave 1, 3-wave in 2, and then a move to the downside in a wave 3 to the downside, right? And that is then also where I prefer to see bearish CVD divergences, but I'll go over the CVD in a second. The target for wave C at the moment, if price falls to the downside, is between the 1 and the 1.236, taken from the high to the low of A to the high of B, which is between 34.7k and 33.9k, which is also in support or close to support over here. It's around the support areas, the two blue boxes I have here, 34.3 to 34.5k, and down here 33.8 to 33.9k. The other scenario is a triangle, but a triangle is really early to call, right? Like, you can't actually call a triangle yet, right? There's many other scenarios that still at the moment have a higher probability till at least wave D is in. So therefore it is very early to call a triangle, but at least it's good to plant the seed, right? Where we then have a wave A, wave B, looking for C, D, E, where all of the waves have to be zigzag structures. And that's a bit of a thing with this wave A here. This has to be an A, B, and then a wave C. It's not a nice wave C to the downside, but in this scenario it has to be. There's no other way, because if we look at a triangle, only wave C, D, and E are allowed to be more complex, and then C and D double or triple zigzags, and E can be a double, triple zigzag or a triangle by itself. But for wave C, we are then looking for a zigzag family structure to the downside, where the most common target for C is between the golden pocket and the 786, taken from the low to the high of B, which is then between 35 or basically 36k down to 35.4k. And what is interesting is that we do have a daily, a fresh new daily in this area over here from yesterday, the close of the daily candle, 35.5k. If we then move towards the confluences that we have over here in the range, we are currently inside the support resistance area that you see over here at the high of the range, right? We had resistance, currently over here acting as support. What is, however, for me very important is the point of control, because you have the value area here, value area high, point of control, value area low. Price is now inside the value area once again. After a little bit of a move to the outside, it came back in. And if price loses this point of control, probabilities increase to first of all fill the gap, but also move to the value area low, which would invalidate an impulse, because the value area low is below the 0.618, and the value area low is also in confluence with the support resistance area we have at the low here. Support, turning eventually in a bit of resistance, but we push through. So this is also an important area. So for me, this point of control is playing quite an important role. This value area playing quite an important role with the Elliott Wave scenarios as well, because losing this and the bearish Elliott Wave scenarios get a higher probability. If we then look at the CVD divergences, there is not too much going on over here locally. Always after a big push, you need to give price a little bit of time to show us what it actually wants to do. Now over here, very locally, if we zoom in to the 5-minute, you can see there's a little bit of bullish CVD divergences going on over here, right? We have a higher low in price, lower low in yellow, and lower low on blue, where the target for the bullish divergence is this high over here. Which means that if you would follow the bullish divergences and it plays out, price is going to take this high, potentially then either creating a three-wave structure for a move to the downside, right? Keep an eye on also bearish CVD divergences, or it's a push and continuation to the upside, right? Because bearish CVD divergences at the moment are not yet visible over here. It was close. It was close over here on blue. As you can see, we had an order block here in green. If I move the cursor down and put it on the high of the blue line, then over here we almost had bearish CVD divergences, but not yet. But if price moves up, keep an eye on the bearish ones as well. And of course, continue to keep an eye on bullish CVD divergences to get a better idea. If price falls to the downside and takes this low, it invalidates the bullish CVD divergences. Now, I do like to actually have a little look on the 3-minute even. I like to use the 3-minute CVD as well, just to check if there is very local bearish ones, but at the moment can't really see any bearish CVD divergences here. But nonetheless, keep an eye on the bearish CVD, and if price does take the low, the bullish one is invalidated. We could be looking for more downside if the point of control is taken. And that is then also what I write in the box over here, in the probabilities of the different scenarios on the low time frame, looking for a flat. And at the moment, because if this is a wave A for a BC in the bigger expanding flat, the first scenario of this video, this one over here, wave A is very long, which lowers the probabilities of this particular flat, but increases the probabilities of this flat over here in a regular flat A, B, and then a wave C to the downside. So at the moment, because a triangle is too early to call still, but kind of has the same result, you will go down and then up, So in a wave C, regular flat, you take the low, but in a triangle you won't. That's the main difference. But it both leads to the general conclusion that I have over here, which means a continuation of the range between 38K and 34K, right? Yes, the double top can be taken and then a move down and then a move up, right? It just goes up and down. But yeah, the general range, that is the idea. And then a flat structure currently has the highest probability at the moment, either expanding or the regular flat, because a triangle is too early. And to keep things simple, as long as price is above the point of control, right, the probabilities might still be there for a move to the upside. But if you're going to lose this point of control, I'd be looking for the scenarios to the downside, like the regular flat or the triangle, filling this gap over here as well. Trade the range until it breaks. They always say no financial advice, but that is of course something that is very common in crypto and in Bitcoin in general, as Bitcoin likes to range, right? So we've already been ranging for a long time, of course, and we could very well continue this range for many more days to come, till the end of the week and next week potentially. So yeah, keep an eye on the point of control, and yeah, losing this area of course would not be good. Increasing the probabilities for a flat, the regular flat ABC, or the triangle. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.